Well, good morning, good afternoon, good evening, wherever you are in the world. Thank you for joining this, the second in a series of webinars from fiber to fashion. Today's subject is China+1. What's the playbook? What is the diversifying sourcing requirements in 2025? We're all seeing huge inflections in the global sourcing supply chain at the moment. After years of heavy reliance on China, we're seeing companies now moving some and sometimes all of their sourcing requirements from China to other countries. And we're here today to learn from some insights on different approaches to this and different lessons learned. And I'm happy to say that I've been joined today by two experts in this topic. The first is Arnold Panagiotopoulos, who is the head of global sourcing at DesignArc and brings with him 25 years experience in global sourcing at places such as CNA. Perhaps, Arnold, I could ask you just to give a brief introduction to yourself.
Mark, thank you very much. Yes, I've got 25 to 30 years experience in retail. I've sort of worked my way up through operations, the buying field, and like you say, I've had quite extensive experience in sourcing, not only in one country, but obviously I've lived and I've managed sourcing from South Africa, from Germany, from Hong Kong, and now I'm currently based in the UK. So I have traveled and worked with over 15 countries sourcing products. So great to be involved today. Thank you very much.
Great to have you here. And for those of you perhaps who have not heard of DesignArc, DesignArc is a subsidiary of PDS, the sourcing group. So just worth mentioning that for you there. So you're very welcome, Arnold. Thank you. Those of you who joined us for our first webinar will have already met Milind Jadeja. He's our Market Intelligence VP here at Fiber to Fashion. But Milind, perhaps you'd like just to give everyone a little bit more information about yourself.
Sure, Mark. Thank you for inviting me for this session. I have an experience of around almost 12 to 13 years in terms of market research and market intelligence. In particularly, I have been working with supply chain solutions over a period of last 6 to 7 years. One of the flagship tool that I currently take care of, and I have been the part of core team member is TexPro, which is the sourcing intelligence tool, which is currently being used by many top brands for their sourcing decisions in terms of optimizing their supply chain, reducing their cost, and managing their risk in supply chain. So all the intelligence they need, we provide them through our solution, which is known as TexPro.
Milind, good job there. Well done. Thank you. One more little bit of housekeeping before we get started. If you have any questions as we're going along, please just pop them into the chat within this webinar and we'll do our very best to answer them for you as we go along. But let's kick off. Arnold, 25 to 30 years experience. So very well placed for me to ask you what factors led to the industry's deep reliance today on China as a sourcing hub?
I think before you answer that, you have to go back and look at the last 30 to 40 years. So when you look at the 80s to around the 2000 period, China established itself as the dominant low labor cost market. And so I think with that, they not only established themselves as a low cost market, but also they developed economies of scales. And what that sort of facilitated was a complete vertical market across materials, mills, dye houses, trims, accessories. And so the market as such is incredibly vertical within itself. The other thing is, I think, infrastructure and logistics. You've got probably some of the best ports in the world, inland road services, And then just the factories themselves are all supreme in terms of just the way they've been set up. As you know, the Chinese are really good at when they have an idea, they just throw money in it and they will invest and develop a factory, an industry within months. So I think there's a lot of support from that point of view. I think government support has played a large factor. There's a lot of export incentives, tax benefits. They've created these industrial zones that really allows policies to be quite stable, and that's really attracted many of the global brands into those sort of industrial zones. Along with the skilled labor, they've also, and through the economies of scales, they've also created a high productivity level. So typically, where a factory in I'm going to throw averages at you, but a factory in Bangladesh might be at 55% efficiency in terms of production. That would be maybe 10-15% in Africa. China would be sitting around 90-95%. So there's just a huge scale in terms of productivity. So the verticality, the skilled labor that's involved in China has really driven that ability. I think China's also established themselves for a reputation to be very reliable on quality, on on-time delivery, but also speed. And I think in the current market, even that is still relevant. When you start talking about fast fashion players, online retailers. So I think speed plays a really important part. Many factories have even established themselves as a circular production rather than a linear production, allowing people to give an order and have production and then delivery within 24 hours, something that many other markets couldn't even fathom. And then I think the lasting level, and I think it's still relevant today, is China is by far the dominant player when it comes to technology and innovation. They have invested heavily into textile automation, smart manufacturing, and digitization. And I think this is what makes them really competitive. Now, a lot of those things were put in place to offset the rising cost of labor, which China has experienced in the last 20 years. But at some point, you can't improve efficiency any more than what it is, and you get to a break-even point. And I think that's pretty much where we're at today. And then obviously we'll talk about some of the other factors that will shift it away. But that's, I would say, probably some of the key factors that have made China so dominant and so reliant in the past 15, 20, 30 years.
Yeah. Not just price then.
It's not just price.
Okay. Yeah. I have to say, I was reminded you were talking about these cities that they create in China, and there's a textile city that I've visited quite a few times over the years called Kachao. I'm sure you probably know it. And I remember being there in 2016 when they announced they were going to clean up all the pollution that was going into the rivers and the lakes that is part of the whole area of Cachao. And at the time, these were places that you really didn't want to go very close to. Within a matter of a couple of years, I was back there and people were fishing in those same rivers and lakes. They just got it sorted. It's amazing how quickly China fixes problems when it needs to. But
absolutely.
yeah, it's an amazing place, but absolutely, we do seem to be at an inflection at the moment where China's at that point where price is now becoming an issue because of the cost of labor. So, Milind, if I can bring you in, please, to the conversation. I'm interested in understanding how the current volatility, if I can call it volatility, in global textiles and apparel trade, driven by things like policy shifts, brackets, tariffs, close brackets, or even logistics challenges, are reshaping people's sourcing strategies today.
Sure, Mark. So just to elaborate and continue from what Arnold said, fast fashion was the term he used. So majorly, a lot of e-commerce players, fast fashion, I would even say ultra fast fashion trends are going on. So due to that, we see a lot of near-shoring localized factories which are coming up. Circuit manufacturing, what he mentioned, regionalized supply chains are building up. So more of near productions for critical SKUs so that they can kind of manage the risk in terms of freight volatility, tariff volatility, even the lead times. Also, a lot of consolidation has been happening after 2020 onwards. After COVID, a lot of supplier base is getting consolidated. So they are working with a narrow group of suppliers, very consolidated group of suppliers who are pre-qualified, audited, and also now they are doing kind of a dual sourcing. So they are in each geographies they are having a primary supplier base which are pre-audited and qualified, and then they are also having a backup in other geographies in case if anything goes south, where quickly they can place an order to. uh, Longer contracts, longer engagements are being signed with those supplier bases so that they can be trained as per the need of the markets, very close to the markets. They can have a vertically integrated setup being established very close to the markets to manage the lead time, and kind of be trained as to work and have a long term partnership with a particular brand. Due to the fast fashion trends, now the order size or the MAQs have gone down. Faster production cycles, more frequent orders. So a lot of local micro factories, like I mentioned, are coming up. A lot of lean inventory has been emphasized from 2020 onwards. Sourcing team has been under a lot of pressure to have a lean inventory so as to optimize in terms of cost, improve their margins, reduce their cost. But now we see a shift also there. Kind of hybrid inventory models are being used by many of the brands, wherein for certain critical SKUs, they have uh, 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 inventory which is lean, wherein they even use air transport, air freights to have a quick speed to the market. For basic and regular SKUs, they kind of have a safety stocks, and there is a huge buying window for regular and basic stocks. So that's how they are kind of having a hybrid model also when it comes to inventory. And
Mm.
after 2020, there is a lot of regulations and compliance in terms of labor laws, in terms of products which are being used. So a lot of investment is being done by brands to have transparency and traceability in their supply chains to ensure the compliance is met with. So these are, I think, broadly sourcing changes or shift, if you may put it that way, that we have seen after 2020 and in the recent times.
Yeah. Arnold, I noticed you were nodding away there. Is there anything you particularly wanted to pick up from that?
I liked what Melindra said in terms of, you talk about backup suppliers, and people throw that word out there very flippantly. But I think the right word to use, I think, is probably building a supply chain that is very robust and very resilient.
Mm.
And that's something that I've strived to do a lot in the last 10 years because I always say if one supplier goes down or if one market goes down, will I be brought to my knees? And if the answer is yes, that's the litmus test, then my supply chain is not robust. And so I've always got to be in a position where I can say, it doesn't matter. There may be a small financial impact, but I can still deliver stock. And I think that's where we ultimately got to get to. I think the gold standard, and I think it has been mentioned, but having a supplier that has their factories in multiple countries
Right.
becomes incredibly powerful. And I'm not talking here joint ventures because that's one strategy, but physically their own factory. So a factory, and this is what we've done with many suppliers, is a factory owner that's got a business in China. He's recognized where the trends are going and is saying, I'm going to go and build my own factory in a Vietnam or a Cambodia or a Myanmar, wherever it needs, because he wants to offer his customers robustness, if that's the right word.
Okay. Yes, that is. It makes absolute sense. Absolute sense. Milind, if I could just come back to you as our market analyst on the panel. What are you seeing as the, if you like, the top macroeconomic shifts or uh, geopolitical factors or evolving trade patterns and policies that is driving the need to source beyond China?
There are a couple of events and a couple of parameters which are impacting this shift. Firstly, the recent tariff policies. trade policies, trade barriers, in terms of quota restrictions. Just to highlight some things, I would like to share some numbers with you.
Yeah, please do.
So in this case, this is the tariff rates which after the recent revisions by US. I have just tried to panel down what the effective tariff rates were in 2024 approximately, and as per the latest data available till August of 2025, you can see there is a huge change in terms of tariffs which are being applied specifically in case of China and India as compared to other markets. So this is also compelling brands to kind of shift to other markets, and also the rate at which the tariff rates have changed have kind of kept most of the buyers and the brands in terms of uncertainty. So they most of them are kind of delaying their orders. Some of them are trying to avoid those markets and try to go to the markets which are more certain in terms of tariffs. So definitely tariffs and trade policies have had a very huge impact in this. Secondly, I think uh, in the beginning, Arnold mentioned of the recent changes in terms of cost in China. So as we know that the cost is going up in China. So just to highlight that point, I would like to show you certain pointers there. So if we look at the input cost in China, just to highlight few things, the minimum wages in China have gone up by 48% in last 5 years, from 2020 onwards to 2025. In terms of industrial electricity rates, we can see there is a significant increase of 24%. In addition to that, other overheads, tariffs have also gone off. Recently, the raw material commodity prices have started to cool off, but there was a time in between which was also going out of roof. So on and all, if you look at the third chart, which is highlighting the exports percentage of export as a percentage of GDP, you can see from 2022 onwards for China, it is going down. So this kind of indicates that the exports of clothing as a percentage of GDP for China has slowed down as compared to the GDP growth. So the elasticity of the trade of clothing, particularly the exports, is weaker as compared to the GDP growth of the country. So the input cost is going up. Also, in terms of major challenges that are there, supply chain lessons that they have been learned after COVID. So the over dependency on any particular market was exposed, and the risk which was there in terms of supply chain by sourcing from a particular market. So after COVID, most of the brands started diversifying their supplier base, also considering the logistical issues which were there due to the congestion at the ports and route disruptions, which again compelled them to look towards to the new markets. Like Arnold mentioned, that in case if any market goes for a toss, then I should have something on the backup. I should not be at a crisis situation. So to make a robust supply chain, they started diversifying very specifically after 2020 COVID onwards. Also, we can see that there is an increased need to the speed to the market, considering the fast fashion trend. So that has, I would say, partially shifted. For critical SKUs, local factories are being developed. Part of them, like Arnold mentioned, is something wherein manufacturers from China are building the facilities in the nearshore markets. Some of them is being also shifted to the very close factories and markets to meet the need for the uptrends in the critical SKUs. And also, alternative hubs are building up. So, for example, markets like Bangladesh, Vietnam, India are scaling up in terms of their production capacities to meet the needs of the kind of size and volumes that China do. So, even if, let's say, a brand has to shift from China to other markets, the other markets need to have the kind of facility, the kind of technology to meet the requirements. So now they have started scaling up. So that again will have an impact on the supply chain, which is as of now predominantly from China.
Okay. Okay. Thank you. Well, let's just pick up on that, and to both of you, but maybe Arnold will go to you first. Which of the countries that have emerged and taken advantage of people adopting a China+1 strategy? And how do they compare in terms of cost and reliability and scalability? I don't know how you pick up on a couple or three countries, perhaps.
Um, So the number one that's benefited is undoubtedly Bangladesh. It has a lot of issues, but when it comes to cost advantage, it's probably the most cost competitive, and you're getting the biggest advantage out of a country like Bangladesh purely on cost. Reliability, I'd say, is moderate and it's growing. Scalability is significantly growing. So it's a strong base for basic product, high
Mhm.
volume product, but it has limitations when it comes to elevated product, something that China is historically very good at. And there are still a lot of concerns around infrastructure and scaling. But if you want low cost, high volume, Bangladesh would be the number one market. I'll throw a market in there that's come and gone just to be a little bit controversial. Myanmar. Myanmar was a market that significantly benefited just before COVID because it had a lower labor force than Bangladesh, but it had almost no skills as such. So there were a lot of retailers that were investing in there based on a future efficiency. And we saw that. And I will give you an example just now. But there was a market that came, and then unfortunately, overnight, many people pulled out because of government concerns. I think another two, three markets would be Vietnam, Cambodia, and then I think with the current FTA agreements imminent, India would be another market that would regain some lost market share that they've had over the last year. So,
Okay.
apart from those, I think nearshore markets would be applicable. And I think Milind talked a little bit about nearshore markets and speed. Without a doubt, I think that plays a role. So Turkey, Morocco, Egypt for European and the UK market, Mexico for the US market.
Okay. Okay. Milind, you want to pick up on anything there?
Sure. So I would like to just substantiate what Arnold said with some numbers. Since I'm a number guy, I would like to showcase some numbers just to substantiate what Arnold has said, and just to add on one or two pointers from my side. So I'm again sharing my screen just to help you with the numbers. Yes. So if you look at this particular table for US, this is the percentage share of various countries and regions in the total US apparel imports in terms of volume over a period of time. So clearly from here, we can see that China has lost the share over a period of last 4 to 5 years from 2019 to 2024 onwards. But however, you can see that for Asia Pacific, it has still maintained, rather increased their share. So from here, we can clearly see that the share which was lost by China is majorly distributed within the markets in the Asia Pacific region itself. So it has not largely shifted to nearshoring or very onshore markets. However, nearshoring markets, emerging markets like Africa, Middle East, wherein countries like Jordan, Egypt, Ethiopia, Tunisia are picking up as far as US is concerned due to a lot of free trade agreement benefits, specialized QIPs and QIZs, which are giving a lot of duty benefits. So a bulk of sourcing is going there. But again, like what Arnold mentioned, low value products, non-critical products, small products are being shifted to those markets. Same trend is something we resonate in European imports also. So China has lost the share over a period of last 5 years. But if we look at Asia Pacific, it has rather gained the share. So again, the share which is lost by China has been redistributed within the Asia Pacific market. However, there are emerging markets like nearshoring markets from Middle East and Africa, just like US. That is the trend that we have seen. Now, in case of Asia Pacific, which are the markets which have largely gained the share? To understand that, what we have done is basically we have tried to again pull out trends from those markets. We have tried to do a country level analysis in this case. So over here, if we look at these numbers, so now I've taken the percentage share of countries from Asia Pacific for US and Europe's apparel imports in terms of volume. So clearly from here, we can see which are the countries and how they have changed from 2019 to 2024. So if we look at both the markets, we can clearly see that Bangladesh, as very rightly pointed out by Arnold, has been the clear winner. It has gained a huge share of 36% in case of US, whereas in case of Europe, it has increased by 22%. Vietnam has also gained share when we talk about US, around about 13%, whereas in case of USA, it has gone up by uh, around about 8%. Pakistan has also shown a significant increase in both the markets. India, there is an increase for US, but however, in terms of Europe, they have lost some share. But as rightly said by Arnold, now with the new FTAs, which is signed with UK and the one which is being proposed with European EU 28 and 27 countries, this is likely to go up going forward. Other markets which have also gained is Cambodia. So you can clearly see in case of Cambodia, it has gained share as compared to 2019 as compared to 2024. Like pointed out by Arnold, Myanmar has lost the share in case of Europe. From 2%, it has gone down to 1.8%. Whereas in case of US, it has been stagnant, not much change there. So on and all, if you look at this, the emerging markets are predominantly from Asia Pacific regions like Vietnam, Bangladesh, India, Cambodia are gaining the share. The largest share has gainer has been Bangladesh.
Milind, thank you for the numbers. They're always useful, and they do, as you say, reflect exactly what Arnold was saying. When will the 2025 data be available? I think all of us are intrigued to see what's happened as a
So
result of the tariffs.
yeah, so in about a time of 2 months, you will have the numbers for 2025 as well. We have the numbers as of now till the month of September, October. The numbers for November and December. We are awaiting the number for November and December.
Wonderful. Okay, that'll be very interesting to see how that's changed things. Arnold, question for you. What are the most pressing operational challenges that you've experienced in transitioning production out of China, and what strategies have you used that have proven to be the most effective?
So I'll start off with I call it operational readiness because I think it's the openness and the willingness to be able to go into new markets and to be able to break away from the norm. And people get very comfortable in the norm, and seldom do people want to change the way they've done things. And so I think the knowledge that tomorrow is never secure and we've got to be constantly pushing ourselves to new boundaries, I think that's the first thing that people need to adjust to. If you talk about moving away from China, the very, very first thing you got to talk about is the availabilities of trims, accessories, and materials. So yes, in the last 5 years, Bangladesh has developed significantly in terms of their mills and the availability of fabrics. But still today, I would say you still probably need 30 to 40% of certain fabrics, especially your polyesters and your complicated fabrics, still needed from China. So that brings complexities. Number one, when you're shipping fabric to another country and there's an issue, then you have to deal with that issue, and you then talk about a delay in dealing with those issues. So I think that's the first thing when you don't have a vertical market, is that you have to deal with quality issues and quality concerns around those source materials. Secondly is the lead time. You probably on averaging adding 20 to 30, 35 days just to ship and move fabric from one country to the next. So again, I think those are things that definitely play a factor. Things like logistics, infrastructure, again, becomes bottlenecks. Again, something that China was exceptionally good at is not so good in other countries. So you fast on the one side, but you kind of slow on the other side. I think together with operational excellence and organizational readiness is cultural. Understanding different cultures. People I think saw this when they went to Africa, and having spent 40 years in Africa, people completely underestimated what Africa would deliver because they said that's the labor. They did a whole calculation. They worked out what they expected efficiencies would be, but in practice, it was a very, very different scenario. It was way bigger in terms of the impact than what was even possibly fathomed. You could run tests, but to actually go through that, it takes a real understanding of the cultural knowledge in a particular country. So I think those are things that have to be overcome. So those are some of the key challenges, I'd say. I think when you look at how to implement the strategy, again, I talked about being robust. So I think the need to do that is really important. So I talked about if you've got the ability to work with an existing supplier, but shift into other markets with that supplier, be prepared to invest and not just for a quick gain in one season, but actually to look at it as a 2 to 3 year plan. If you can build those efficiencies, then in 2 to 3 years' time, you will be cost neutral, then it's a good strategy. But many people are resistant because they're saying, I cannot give up the margin for next season by moving from this market to that market. And you need to think a little bit longer term than that. It's got to be 2 to 3 years because I gave the example of Myanmar and I can give the example of Bangladesh. Those are two markets where when you go and spend time with suppliers, you develop those suppliers, you work with those suppliers, you can build efficiencies. Myanmar went from 35% productivity to 60% productivity. So in the beginning, they had lower labor, but you only really saw the benefit of that lower labor 2, 3 years later. Bangladesh, their concern was fabrics. So they had the lower labor, they had the factory, they had the infrastructure to build and scale those factories, but they didn't have enough natural or raw materials. And so slowly they've built, and mills have invested into Bangladesh to grow those capabilities. And then I'll throw one more example again, maybe. Having done lingerie, a country like in Indonesia has been exceptionally good. When they move into a country, they can't just move into just production, but they've got to make sure that they move as a complete vertical outfit. So therefore, all the trims, all the components have to be shifted from your current source and be produced in that market to be able to be vertical. So I think taking all those factors in place, I think it's important to be very strategic with how you diversify and be very strategic how you grow with suppliers. I've
Mm.
also seen so many suppliers fail because you find a good supplier in a new market and then you go and give them millions of pieces in year one. And then it all fails, and people say, oh, wow, the supplier wasn't good. No, it needed time, it needed education, and it needed you walking hand in hand with that supplier for 2 or 3 seasons before you can be at a point where you can open the floodgates, so to say. So for me, you need to be very intentional and very strategic in how you build a robust supply chain.
Can I just push you a little further on this one because this is fascinating
Sure.
stuff. I mean, can you share with us a case study or an example of someone who has successfully transitioned out of China to another country?
Okay, without giving names, obviously I can draw on some of my own experiences as well as some examples I probably know of. So I could take a mid-sized European brand without mentioning the name. They probably shifted 50% of their production from China to Myanmar. And I use Myanmar as an example because it's a great one, even though it came and went. Um, these factories were built, they were Chinese owned, they were built in Myanmar. That
Mm.
brand went into that factory, placed 80% of the factory's capacity. So there was a real partnership, and that was the successful part of it. So because there was a partnership, you leverage that relationship, and very often a supplier will say, "Oh, Arnold, if I invest in the country and I build a factory, will you give me the orders?" And I'll say, "Yes, I'll give you the orders because I'm investing into the long term." So it gives them the incentive to go and do that. Without that, they don't have the break-even point. So they immediately are able to do that investment and to work with you to get to a point. So I see those as a successful point. I think the negative on that is, of course, productivity levels were not what they were expected. Delivery performance was not what was expected. So if you're expecting the same quality, the same delivery levels, and the same productivity levels that you had in the previous market, the buyers and your commercial team will be disappointed. So I go back to that organizational readiness. They need to be on board right through the whole chain to make sure they're saying, okay, we're investing in this new market with you. We understand we have to give you the right products, products that are not seasonal, products that are very core, very basic, to build capabilities to find some success. So that'll be one example I can give you. Obviously,
Yeah.
I've got a lot more examples into Bangladesh. I've got examples into Vietnam, Cambodia. But Probably the most commercial one. Like I say, leaving Myanmar was a political situation. It had nothing to do with up to that point. It within a 2, 3, 4 year period, it was incredibly successful.
Interesting, interesting. Thank you, thank you. So all too soon, we've come to my last question, but it is to you both. So it's crystal ball time. So looking ahead, the next 5 or 10 years, how do you envision the global sourcing landscape evolving? Um, in particular, in terms of countries, regional hubs, perhaps even technology integration. But I'll turn to you first, Milind. What do you see here?
Uh, so the broader themes that would be like what Arnold suggested would be definitely a lot of co-working strategic partnerships with qualified consolidated base of suppliers, wherein they can jointly invest with a long-term view, have a longer order book guarantees, and they can plan vertical integrations also, like what you mentioned in Bangladesh. Um, so a broader themes would be going forward a lot of diversification in terms of sourcing footprints, but at the same time a consolidation of supplier base, development of nearshoring and onshoring production bases with the help of existing qualified suppliers, vertically integrated, so as to give a kind of speed to the market. Uh, Also, in terms of tech, with AI, a lot of investment will be done in terms of AI demand forecasting so as to pick the trends very early. A lot of AI tools would come up which will help you in terms of optimizing the supply chain in terms of cost, traceability, and compliance. A lot of investment also would go forward in terms of automation and smart manufacturing also, and also a lot of AI-based tools would be used for in terms of product developments, designing and product development collaboration. So these are the broader themes I think would play out in the next 3 to 5 years.
I, I wondered when AI was going to get mentioned. Arnold, your thoughts on this? What do you
Uh,
see?
I will add 3 points, but maybe some of them add to what Milind says. So, for me, without a doubt, technological integration has to be one of our most important things we look at in the next 10 years. So, Milind talked about AR, but it goes so much deeper into that in terms of traceability, in terms of blockchains, in terms of digital forecasting. There's so much that can be developed around, call it technology and digitization, that I think that's something that we have to factor into every sourcing strategy. Number two, Milind talked a little bit around partnership, but I'd extend it to even logistics. So again, an example, I developed a new market with Egypt, and the logistics chain was incredibly complex. So you think Egypt is just on the border of Europe, but it still took 30 days to ship it from Egypt, Cairo to Rotterdam, and go through the process of logistics and not logistics through imports and all the rest of it. Where there was a way to ship it across to Trieste, and then truck it all the way to Europe, but it was a lot more expensive. And if you can work on economies of scales and work as a partnership with your logistics provider, you can find those economies in 1, 2, 3 seasons. That at the end of the day, you'd get the speed, but then you'd make the cost neutral. And so that's where, in the essence of partnerships, I think whether you're going to a new market and you need to make it vertical, you need to bring your trims and accessory partners as part of that discussion. Whether it's a garment producer, they can be a partner into new markets, or even forwarders and logistics, they become partners into that chain. So that would be my second topic. And I think third topic, we touched about nearshoring. And yes, it will always be a little bit more expensive, and it will never be the majority of the share. But I think that the shares that most retailers and brands have sourced near shore is too low. If the average would be, let's say, 10, 15%, it probably should be 20 or 25%. So I think having the ability to have a good, robust supply chain on a nearshore vicinity gives you a lot of flexibility. And that's where you talk partnerships again. Are there fabrics you can order in advance, manage that liability, but you bring it into your nearshore market and then you use that liability effectively? And I think many people are very scared of doing that because there's a liability cost. But I think that's a great way to give yourself flexibility, but also make yourself robust that if anything goes wrong in the supply chain, you can react quickly. And I think COVID taught us that more than anything else. But I think people need to adjust to that. So I think regionality, partnerships, and technology would be my three key points.
Okay, well, gentlemen, that has been one very, very interesting session, I have to say. Some fascinating stuff. Arnold, thank you for your insights, born out of your extensive experience in sourcing. Milind, thank you for your insights, supported by, of course, the statistics that you shared with us. Can I thank you both for your time today? Can I also thank our attendees? You are very welcome. Hopefully, we've answered any of your questions that you've put into the chat. But if we failed to get round to your question, we will not ignore it and we will come back to you with an email answer to you very shortly. So that's it for today. Our next webinar will be just around the corner and we'll be letting you know when that is as soon as we can. So once again, thank you, Milind, thank you, Arnold, and thank you for attending today. Goodbye.